Good morning, everyone. This is Amit Pabari, founder and managing director of CR Forex. Few weeks back, when everyone was saying Rupee might move towards 100, at that point of time, we released a video, and in the video, we described what are the steps RBI can take to prevent Rupee weaknesses. In today's presentation, we will understand what kind of steps from that 5 step RBI has taken and how much flow we are expecting in next 3 to 6 months, and what is the ideal strategy for an exporter and importer. Out of the 5 things what we suggested, RBI did 3 FCNR B बॉन्ड पे कुछ अनाउंसमेंट किया, सेकेंड डॉलर बोरोइंग पे इंसेंटिवाइज किया, थर्ड दे हैव इम्प्रूव FII flows by removing the taxes. I would have been extremely happy if they would have gone and increased the interest rate. Now, to understand what step they have taken, we have to go back and understand what was the issue, why RBI did that. So, अगर हम अपना balance of payment का structure देखेंगे, as a country we are net importer. तो current account deficit हमेशा रहता था. Now, in order to balance the current account deficit, we were always getting a positive capital account flows from FY21 till FY24. As a result, our FX reserve was increasing from last 2 financial year. यहाँ पे करंट अकाउंट डेफिसिट तो है ही, पर कैपिटल अकाउंट डेफिसिट भी हो रहा था. इसके कारण रुपी जो था ऑन अ कंटिन्यूअस बेसिस वीक हो रहा था. Whatever steps they have taken at this point of time, they have taken to ensure that capital account flows start coming into Indian market. So basically RBI has taken 6 kind of steps. First 3 will have highest impact with respect to the flow, and the next 3 are less moderate. In today's presentation, I am going to explain the first 3, which are very critical, and why the flows will come. If an FPI wants to invest in Indian government securities, there were lot many restrictions. तो पहला रूल किया, approximately our government security market is close to 47 lakh crore. The first rule which still prevail is total of all FPI can invest in Indian government securities is close to 6% of the total pool, which is approximately 2.8 lakh crore. Now a single FPI cannot invest more than 10% of the entire limit of 2.8 lakh crore, which comes to 28,000 crore. अगर कोई फंड बड़ा है तो they have got a limit close to 15%, which approximately comes to 42,000 crore. Now, to give you a context, 42,000 crore might sound very big to us. For an example, अगर Norway pension fund है, their book size is close to $1.7 trillion. If you allow them to invest 42,000 crore, so basically you are telling them that out of your total pool, you are allowed to invest only 0.3%, which becomes very negligible. उतना छोटे अमाउंट के लिए the compliance and the cost does not suit them. By removing this rule, now we can expect, if Norway pension fund wants to invest in India 10 to 15 billion dollars, they can go ahead and do that easily. Second important step what RBI has taken is that if you want to invest in Indian bond market, there were generally 2 routes. A general route tha, and second was fully accessible route that was easy to invest, but it had a constraint that in that category you cannot go and invest for long term bonds like 15-year, 30-year and 40-year. In the new regulation, RBI has allowed long term investment up to 40 years. Now, इसका positive impact क्या है? The positive impact of this new rule is that any pension fund who wants to match its asset liability by investing in long-term bonds now can easily go ahead and do the same. Now the icing on the cake is government has amended Income Tax Act based on the new rule effective from 1st April 2026, any FII investing in government securities are exempted from interest income tax plus capital gain tax, now which is going to help India to attract more inflows in the debt market. Third step, what RBI has announced is that if any bank is attracting any FCNR flows, hedging cost will be borne by RBI. Exactly similar kind of a structure Raghuram Rajan also allowed in 2013. At that point of time, we were able to get flows close to 30 to 34 billion dollars. That time, interest rate in US was close to 0.5%. Today it is close to 3.5%. At that point of time, we were able to attract huge amount of flow with the single step announced. This time, as interest rate in US is higher, we might not be able to get 30-35 billion dollars ka flow, but sizable flow close to 5 to 10 billion dollars can still come. Fourth step, what they have taken, they have allowed PSU bank to go and borrow in the form of ECB. Now RBI has said that they are going to bear the swap cost proportionately. They have not mentioned the exact percentage, but let me give you an example. Say if SBI or any PSU company wants to go and borrow 100 crore in dollar funding, their approximately cost with hedging will be close to 8.5%. In the new form, if RBI is bearing 50% of the cost, probably their borrowing cost will come close to 7 to 7.5%. So basically, any PSU will go and save 1% on a straight away basis. अगर 100 करोड़ का फंड बोरो करता है 1% क्लियर कट उनका सेविंग हो जाएगा. Apart from the four steps what we have discussed, they have taken two more steps. According to us, those steps are not going to yield much inflow, but the fourth step what we have discussed can likely bring inflows close to 25 to 30 billion dollars, which will support rupee. Now let us discuss outlook on rupee. From last 2 weeks we have been discussing that RBI is going to take some kind of steps, as a result of which rupee can move lower towards 94.80 to 94.50 kind of levels, and those levels are almost there. Now with RBI taking relevant steps, the medium term view remains the same, that rupee is likely to break 94.5 kind of a level, and it can move lower towards 94 to 93.80 kind of levels. But saying that, any negative news with respect to US-Iran war can take the pair higher towards 95.30 to 95.50 kind of levels. So we can say that any uptick should be used by an exporter as a selling opportunity, and importers should avoid hedging long-term imports. With this, I will end my today's presentation. Jai Hind. नमस्कार, फिर मिलेंगे नेक्स्ट वीक. थैंक यू.